Oh boy, even as AMC stock is going higher by 37% today, it looks like the shorts are even adding to their positions today. Yeah, if you don't learn once, you don't learn twice. Well, you're not going to learn the third time, huh? Let's go ahead and get into all of this information, look at what's going on with AMC stock today, and overall just talk about it. So hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section if you have not done so already. If you guys have not as well, come join the trading community. Link down below in the description of this video. Definitely recommend you guys come join us. Now, AMC stock. What a beautiful stock today. Up about 37%. Now, it was very volatile. In the beginning of trading, you seen a pump fake, or a drop fake, maybe I should say. Look at this bottom wick, all the way down to this 100-day moving average at about $5 per share. It fell a little bit under $5 per share, but call it $5 per share. 100-day moving average at $4.91 per share. You basically bounced right at that level. You rallied back up above the 200-day moving average to about $6 per share. Now, I think this is going to be a multi-day, if not a multi-week rally. Because I've talked about this before, but I think it's important that everyone understands this. Nobody was expecting this to happen. Not one single hedge fund that was short on AMC remotely thought what we're seeing today was a possibility. Not even one of them. They were not satisfied with shorting 30% of the free flow of AMC. They also had to go out and create massive synthetic short positions using the options. And to a large extent, they're still doing that today. Which, again, if you don't learn once, you don't learn twice, you're not going to learn 3 times. Now, in the process of creating these massive short positions, the massive synthetic short positions, they also had zero regard for risk management or hedging out their positions whatsoever. Look at the put to call ratio. It's never been this high. You've never seen this many puts on AMC's option chain relative to calls ever. If you look at July 28th, the open interest on the call side, 28.8%. The vast majority of this is retail. You and me, buying the calls. While the puts open interest at 71.2%. Essentially all of that, more than likely, besides a couple 100 basis points or whatnot, a couple percentage points, is hedge funds and institutions. We've reported on this day after day after day after day. The option orders were massive. And even last week on Thursday and on Wednesday, I was warning that a decision was likely imminent for AMC from the courts. And I expressed why I thought AMC would rally. Now, granted, I was wrong. I expected a rally for, the purpose of AMC raising billions of dollars of capital. And to the same logic, nobody's really hedging out those positions. They were doubling down on their shorts, doubling down on their synthetic shorts using the options, and there was zero regard for hedging. Usually when everyone is betting on one thing, that one thing typically does not happen. Or if it does happen, you typically don't get that reaction you were hoping for in the share price. And that's exactly what did happen. Although I was wrong about what the outcome of the courts was going to be, we were dead right on the outcome of the stock, which I think is more important. There's absolutely no insight that we could have drawn from the court proceedings. There was a lot of insight that we took from the stock, the price action, as well as the option orders. So this was forecasted. This was coming. We've talked about this for weeks, literally weeks. You were well prepared for this. But hedge funds and institutions were not. So what you're seeing on the day today as far as the option activity, 252 orders totaling $41 million with a positive order value of 26%. This is a lot better, call it, than what we've seen over the past week, couple of weeks, months now. A lot of the time you see positive order value as 0%. Not one single call bought by hedge funds or institutions on any given day. Well, Today you're seeing, a decent amount, but it's still skewed over 74% negative, which makes you scratch your head considering what's going on with AMC. Now, could be a bumpy ride. Keep that in mind, because the judge did not just outright dismiss the reverse split and what AMC wants to do. They dismissed the settlement and will not let this go through until there's a better settlement. Maybe that never comes. Maybe it takes a long time. I think that's really what's going on here. Markets are saying, hey, this is going to take a long time, and now there's a much greater chance that this thing never goes through. AMC never does any more dilution. Who knows what that does for the business over time, but AMC probably not going to do any more dilution. So that's why the stock's rallying. And I think this is an ultimate, fucked up moment for the shorts. They're in a really bad situation. Now, short score is sitting at 95, the highest it's ever been. $636 million worth of short positions in AMC. This is not updated, so this number is likely around $850 million, if not closer to $1 billion. If you include the option losses that hedge funds have seen as well, for last week as well as for this week and weeks down the option chain, it's massive, and that's definitely in the billions. Now, 28% estimated short interest of free float. We've talked about this before. The free float is likely over 100% sold short. Days to cover sitting at 9.56 with utilization of 84.8. Now, cost to borrow fees over 1,000% on the day. Cost to borrow max at 1,060%. Cost to borrow minimum at 28%. Cost to borrow average 313%. These numbers are insane. And you'd have to be crazy to pay them in the first place. Not to mention actually losing on your short position. That's a whole new story. That's on a whole new level. Just the cost of borrow fees alone are insane, and you're crazy to pay them. So everywhere I look, it looks bad for the shorts. And I think it will continue to look bad for the shorts. Now, the Fed could be an interesting catalyst this week for AMC. That's going to be on Wednesday. Now, why I think this could be an interesting catalyst is because the markets have grown more accommodative, let's call it, to short squeezes and higher valuations and the things of that nature. You've seen short squeezes actually play out around you, Carvana being a big one, just over the last couple of weeks here. So this environment is more allowing for, 10x moves or more potentially, compared to what we've seen in 2022 and the first half of 2023. And this is because you're getting close to the end of the rate hike cycle. Wednesday is probably going to be the last rate hike. You're probably going to get a dovish hike, meaning the Fed's probably going to, say they plan to hold for a long time. And then the markets, once you start to hold, or the Fed starts to hold, we start to price in rate cuts pretty soon down the line. So this means longer duration assets can do better. More speculative assets can also do better. And I think AMC fits both of those kind of bills. It also does something for very indebted companies. It makes it easier to service those debt costs. A lot of debt is fixed. A lot of debt is not fixed. So you actually have to kind of go through the balance sheet to see. But when rates go lower, refinancing becomes a lot more attractive, obviously, if you're able to refinance, just depending on where the business itself is at and how the business is ultimately doing. So I think that's going to be a massive catalyst. The Fed is on Wednesday. A big potential negative catalyst you want to watch is Microsoft and Google. If they have bad earnings, we're going to have a problem on our hands. That's just the bottom line. Everything in the markets is probably going to get hit. Nothing will be safe if that is the case. So you want to watch that, as well as Meta on Wednesday. But as long as, we don't get anything crazy happening in the markets, I see what's going on in the markets as likely a very bullish thing for AMC, believe that or not. Right? Even if the markets are negative off of earnings, off of Microsoft and Google earnings, That could be a positive for draining liquidity out of hedge fund and institutional portfolios, as that's where a lot of their money has been concentrated in the first half of 2023. Well, that could give them less money to service some of their margin calls, because a lot of these firms were balls to the walls in this trade. Nobody thought this was going to play out like this. Not a single hedge fund or institution thought this was remotely a possibility. There was no hedging. And if we look at Tesla, AMC's charts, I mean, a continued move higher almost looks like a certainty from here. Usually you don't just get one big candle. Usually if you get a big candle, the start of a, rally, usually it's followed through on with multiple big days. And I think that likely is going to be the case yet again. So just, some things to keep in mind. Kind of what I'm looking at as of right now. So let me know what you guys think about all of this down below in the comment section. What is your price prediction? What is your target for AMC? Where do you think AMC is going to go? Let me know down below in the comment section. If you have not signed up for Webull, Moomoo, or Public to get yourself some free stocks, some free money, well, link down below as well in the description of this video. Help support the channel and continue to make these videos a possibility. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.